Good morning, everyone. It is Thursday morning, the last day of September, the last day of this quarter, getting ready to go into the fourth quarter. And what did you think of the markets yesterday? Did we get faked out? um, maybe not, but they're doing what I anticipated the markets might do. I thought it was a little suspect, the bounce, and turned out to be, kind of a choppy day. So, with that being said, going to talk a little bit today in our pre-market prep about, should I day trade or should I swing trade, and I'll let you know what I do in that process. and so I won't let the cat out of the bag at this point in time. Make sure you click the like button, subscribe so you can catch more of our pre-market preps. But let's get into some housekeeping right now. With that being said, I am not a financial advisor, nor do I give financial advice. I don't give stock picks. I don't do anything like that. I want you to do your own due diligence. I want you to, look at your own entries, exits, determine your own risk based on what is suitable for you, not me or anybody else for that matter. Nothing in these videos should be misconstrued or any indication for anybody to make any particular trade or to buy or sell any type of stock or security or an option. Stocks and options both have risks, and neither one of those may be suitable for any particular investor. And, past returns are not a guarantee of future returns, vice versa. But, history does not necessarily always repeat, but it does rhyme and looks somewhat similar. But at the end of the day, when I do my videos here, these videos are part of my trade journey, part of my trade journal. They're part of my own educational process. It helps me talk through the process of determining what is good for a trade plan for the day. So, what we'll be doing today for, September 30th and how we will be trying to move our account forward. I'm an older trader, rather risk adverse. I don't like losing money. This week has been a down week for me. One of the worst weeks I've had for quite some time. I, which some people might think, hey, that's not much, but I've got about a 4% drawdown on the account for this week, and that's a little bit too much after, and that I feel comfortable with. So, when I'm targeting about 5% a week, when I have that big of a drawdown, then that puts me behind the next week. So, we have to double up just to try to keep on track. But anyways, neither here nor there. But with that being said, should I, in order to trade, should I day trade or should I swing trade? Well, if you're a day trader, you have to be aware of the PDT rule, and that's you need to have an account $25,000 or more. Otherwise, you're going to be capped at no more than 4 day trades in a 5-day period. If you do that, then you're going to get a margin call on your account, and they're going to want you to put up the cash to get you, so that way you won't be recognized as a pattern day trader. So if you have a $10,000 account, you trade more than 4 times, you're going to get an alert on your account, and then if you don't make good on that margin call, any positions, they can sell off any positions. They can close you out, whatever the case is. If it's your first offense, you can pick up the phone. I've done it. It's happened to me more than once, and so I pick up the phone, call them, and like TD Ameritrade will give you, I think they'll give you 3 of those in a year's time, where you can, they can't be all grouped together. So they have to be roughly, I think, 90 days or 120 days apart, but you could get by that. And then when one drops off, so anyways, a year later, they'll drop off. And, but just best don't do it. And then swing trading is, you're going to swing trade, you're going to hold the trade longer than a day, preferably probably 3-5 days, or you may be a much longer term, maybe in the weeks or months ahead. From that standpoint, doesn't matter if you buy a stock today, sell it tomorrow. So if you buy it at 3:59 today and sell it at 9:31 in the morning, that is not a day trade. Okay. A day trade is a round trip, buy and sell in the same session. In other words, during the cash session, in pre-market, or even if it's, in the after hours, that is the same day. So, but with options, there are some ways around that. Okay. You can trade on a day trade basis. You could trade an option and on a 0 DTE. So if it expires today, I could sell or sell credit spread or a debit spread or something like a call or a put, excuse me, and I can let that expire. If that expires, it doesn't go against me as a day trade, okay? Because I didn't sell it. I didn't sell it or close the position. The option expired. The other thing is you can go in and trade the E-minis and the E-minis and, the futures, for example, and you can trade those. And so like the E-minis, like the mini NASDAQ and mini Dow, the mini, Russell and the mini SPY, S&Ps, you can trade those all day long. And they trade 20, all day, all night. You can trade them and make as many trades as you want. And those don't count as day trades. So, but again, not necessarily suitable. So with that being said, let's take a look at the markets here this morning. Yesterday, well, before we do, let's jump into our charts. I pulled up the bonds here because the bonds are, affecting what's going on. The bonds are back up again a little bit, up over 1.5%. And so matter of fact, I should have had that pulled up here. Let's see, what are the bonds here this morning? Let me move something out of my way and close that out. The bonds are, just bear with me here. Looks like the bonds are 1.531% as of right now. And, so that they are down just a bit. But again, they're pushing up. Yesterday they got down to, I think yesterday's low, they got down around 1.4. They were just under 1.5% yesterday. So they are creeping back up. So, when we look at the bond yield right here, so and the long-term trend, let's look at this on the yearly chart. So this is what we've been seeing the bonds do. And now, we're approaching these lows down here. And this is probably where we're heading. When we look at the bonds on the intraday, we can kind of get a better snapshot of what they're doing. And they don't move a lot, but we can put a minus sign in this because this is actually upside down to what the price action. So when you look at this, you think, hey, wait a second, bonds are going down. So that actually when they go down, when the chart is reading down, the bond price is going up. Remember, if you're watching this and you're playing the NASDAQ, watch the bond, watch these bond rates. This chart here, this is going to tell you what the NASDAQ's going to do. So if you really want to get a kind of an idea on this, just put a minus sign in front of this, and that will invert the chart. And sometimes when you invert the chart, especially if you're like, if your bias is bullish, sometimes to look at it this way and just remember and say, okay, would I buy this up here? This is really, really extended. No, I wouldn't. So we need to revert back to the mean. Well, that's exactly. So when you think about it, look at it from the same standpoint as this and reverse that. And it's the same thing. It needs to revert back to the mean. But what's the mean doing? The mean, everything is indicating we are going lower. We are getting on the ready aim fire down here. Looks like the bonds might be reaching a point of exhaustion for a little bit, but so we might be hitting a bottom. So this might give us a little bit of a bounce, a dead cat bounce in the Qs coming up here, possibly going into October, only for this to probably fail revert back to the mean. All right, because that's where things want to go. So we may have some plays here and have what we would refer to as a rally. Now, when we go into and we look at that on the cues, that's might give us the same type of. If you look, the charts look kind of similar, right? Kind of ironic. So, if you look at the cues here, we're hitting this level of exhaustion, and so on the ready aim fire, we don't have a signal yet of showing exhaustion, but everything's pointing to the downtrend. As I talked about yesterday, these markets are in a confirmed daily downtrend. The other thing here is the VIX. When we look at the VIX dropped down here under 20, under 21, but it's still relatively high. Until we get below 20 and stay below 20 and maybe even go below 19 or 18 or below that, the volatility, these markets are suspect. These markets are at risk of, they can reverse on a dime. One little word out of Chairman Kapow, he will kapow the markets and we go the other way. So there's a lot going on, and just is a great area to either sit on your hands, stay in cash, because if you lose 30% of your account, over the next 30 days, then you might be a little upset. But if you sit in cash, and if you never traded a market like this, then you might be best. And that's something that I'm staying more. My goal is to trying to figure out how not only to still grow the account, do what I need to do, but do that, manage that on lower risk. In other words, taking smaller positions and managing it. And in this case, looking at it, playing it on shorter time frames, which might be day trades. In options, it would be same day DTE. I can take a Monday, Wednesday, Friday on the SPX or the RUT or the NDX, and I can trade those and not have risk of assignment. But at the same time, those are European settled, so there's no risk of early assignment, and they cash settle at the end of the day. And I can, put the risk on, and just say, I'm willing to kiss this risk goodbye. If my trade is wrong, I'll do my best to manage it. But if I'm wrong, then I'm wrong. But to manage that to the point where you make a decent credit, and that's where I'm at. And I like credit spreads because you don't have to be 100% right on credit spreads. But anyways, that's a whole nother story. So this is what we've got going on to the Qs. Let's jump over into the Dow. Again, still holding the weekly 21. It looks like we are just below the weekly 21 here on today's candle, on this week's candle. So, but still holding this price level of 34,450, really close to that. We're just a bit below that, but we're up 130 some points. The question here is, will this bounce and this little upward tick? But got a lot of overhead resistance hitting right here. We're bumping into the daily 21. We got to get below the SAR trailing stops here, and so that's a level of resistance there. So until these red dots click back over to green dots, we are basically got some resistance to get through. We've got some increasing momentum shown here in the histogram. We've still are in a weekly squeeze, which is just really holding price down. And I think, and so we're tightening up here, which, if we trade in this zone right here, this is not necessarily a bad thing. It's just that we have to figure out how to trade that. It's a little bit different. It's like, sell credit spread here, and then sell a call credit spread here, and just play it, to the, so when we get a reversion to the mean, might be looking at, shorting the rallies. I don't think the Dow is a shortable. I don't think I would short this here. I would probably look more at the S&Ps or the Qs to look at shorting those indexes. Let's take a quick look at the Russell. The Russell again. I missed the play on the Russell yesterday. I was looking at playing this. It did pierce that yesterday, but I was looking at this on a iron condor. So if we can stay in these tight ranges, this is iron condor range, and that's what I'm looking at. So if we can, so this one right here, we'd probably be looking at, this one might be a short here. We're up at the higher range, so we get up in here closer to the 1 ATR. We would be looking for this to either play this back to the mean or lower, and vice versa. So that's how I'm looking at, because the Russell is trading in this tight zone. But this is, if you can get wide enough wings on this and you wanted to put up some capital, this very well makes for a good iron condor play on that. Then lastly, let's take a look at the S&Ps. The S&Ps looks very similar to the Dow right now. Just remember the FANG stocks and the Qs, heavily weighted. So if those are being dragged down, then the S&Ps are probably going to go down and be held back. Let's just say, not necessarily maybe drawn down, but just kind of held back. But the game plan here is we are still above the weekly 21. So the game plan here is what I'm looking at going into October would be for this to consolidate, hold this level of support. So this key level 43, we'll just call it 43.50 on the S&Ps here, needs to hold that as support, and we will play this back up to the mean. So this might be an area that we would look at, if we can get this to pull back just a bit. We are up 18.5 points, and we look at maybe popping back up. But I think we're going to chop around here, get back to the mean, and then we would do this downtrend here. We get back up in here, we'll play it back down to here. And then as we begin to wedge out, this puts us in mid-October right here. So around October 12th, that puts us right around mid-October. Then we will probably be in a daily squeeze. And if we hold this and this wedge, and then we would want to see this break out of this going into the last half of October, and game over on this part, and we get into an exciting part of the last quarter of the year. So with that being said, that's kind of what I'm looking for. So October is kind of get by, figure out your plan. You're going to day trade, you're going to swing trade, you're going to put a combination of both, put that into your game plan, make that as part of your trade rules. But just understand the day trade, you have to trade, well, you don't have to, but if you're trading stocks, you want low float, high momentum stocks, and you're in and out. And so swing trade, you don't have to always be right on the money. And your timing does not have to be perfect. You just need to get an entry, and you need to identify good support levels and resistance levels, and just make entries based on that, and you're off to the races. So with that being said, click the like button, subscribe, and we will talk to you on Friday, which is tomorrow, the first day of October. So get ready for Halloween. We will make our charts orange. How's that? Okay. Talk to you guys tomorrow.